Good afternoon. Thank you very much. I would like to thank our sponsors as listed at the bottom of the page: Bell Bank and Mortgage, North Star MLS, Royal Credit Union, and Supra. And without their support this year and for many years, we wouldn't be able to continue to deliver this great content. But I just wanted to walk people through what's going on with the government response. There are, as I just mentioned, there are some new items, so we'll try to cover those as well. I might bounce around a little bit. If you've been in the last couple weeks, you may have seen some stuff. I might gloss over things that have been in place a little bit longer, but the whole presentation is available, and we'll make it available to folks. Even if you received it last week and you're going to want to receive the new one this week, and make sure you request that by email, we'll push it out to you, because there are new updates with new links and new help for realtors out there. So we'll just jump right in. My name is Eric Myers, Government Affairs Director for Minneapolis Area Realtors since 2017, bachelor's degree in political science from the University of Minnesota, and I've been actively lobbying for 20 years and 12 years for realtors since February of 2008. So I lobby kind of crisis to crisis. That's kind of my whole approach. So skipping ahead, my role on a daily basis for the association is to keep track of what government might be doing that could impact real estate and real estate transactions and consumers. And that during the pandemic, my approach is, so usually I'm focused on city and county level actions in Hennepin County and the 4 next most immediate counties for Hennepin County. But during the pandemic, I'm watching all 3 levels of government: the U.S. House, U.S. Senate, Minnesota House, Minnesota Senate, the executive orders from the governor, and then kind of guidance from the agency level administration in Washington, guidance from HUD, guidance from IRS, Treasury, and others. And some of these will actually come into play today with some of the new content. Our resources are available here. Here are the links. You can end up at the Minneapolis Association COVID-19 resources page, and there's a lot of good information. If you can think of a question about how things right now relate to real estate, and what about this and what about that, I would start with any of these 3 guides first. And much of it is synthesized for you all at the Minneapolis level. But if there was a state question or an NAR question, there's some links here as well. So Minnesota realtors are considered essential, and those orders can change. And we do ask that people still continue to follow CDC guidelines and avoid any negative PR. I've kind of addressed this in the past, and I think my point about avoiding negative PR is make sure we're following the rules, make sure we're practicing good social distancing processes regarding cleaning in and out of showings and showing activity. Keep showing activity a good half hour to an hour spaced out. Don't touch surfaces on the way into a property. Try to touch a few surfaces on the way out of the property. And then just kind of don't have people congregating at the property. Let's not have 10, 15, 20 people standing outside of a property where your arm sign is, or anyone else's is on the lawn. And so someone comes by and snaps a video of this obvious breach of the requests to social distance. So I think we all know what that means. Foreclosure and evictions. There's a presidential order and a governor's orders on foreclosures and evictions. And I actually have another slide today that's going to empower you all to work with consumers on foreclosures and evictions. So foreclosures and evictions, just understand there's a presidential order and that it applies for 60 days on all properties that are backed by the federal government. So anything with secondary financing. The governor's order in Minnesota is for the entirety of the peacetime pandemic, and we'll talk about that a little bit later as well. Actually, maybe we'll talk about it here, because I don't think I had an opportunity to drop it in. It's good for the entirety of the peacetime pandemic. The peacetime pandemic from Governor Walz was originally announced on March 13th. It was renewed on April 13th, and it is likely to be renewed this month on May 13th. While the legislature is in, the governor has the right to issue these executive orders. As soon as to continue the peacetime pandemic for 30 days each time. When the legislature's out, they have to come back in and approve those. And so that hasn't been the case yet. And with the legislature wrapping up its schedule, I think we're going to see an extension of the peacetime pandemic this week. And that does have some implications for those foreclosures and eviction suspension, the situation and the status here. Of course, specific to facilitating transactions, realtors are essential appraisers, realtors, titles, inspectors, and photographers. Stay at home is currently through May 18th. Some information we've covered already: wash your hands, stay at home, maintain a social distance, and work from home when possible. Couple weeks ago, on April 27th, non-critical sector folks were allowed to start going back to work in office-based and industrial settings, as long as they didn't have any customer-facing component to their business. The week after that, customer-facing retail was allowed to come back from a curbside or outside pickup or delivery. So you can see that we're starting to see a slow trickle of reopening, kind of a cautious trickle-based approach to reopening in Minnesota. I think you'll continue to see that. I think you're going to see some changes this week that start to loosen things up as well, and a little further, and it's just going to be slow as we go for a while. So there's been this graphic that the governor's been using, and so you can land on his site and find this, and they've got the workplace settings. So let me use my laser pointer here. Workplace settings, social settings, and what's going on with schools. And this was the first one a couple weeks ago, and here's last week's, where you can see that we went from only critical services being open prior to 2 weeks ago. A week ago, two weeks ago, they opened and went to office and industrial, and now they've moved to curbside pickup and delivery for those non-essentials. Of course, Targets and Walmarts, and then a lot of grocery stores were open already, but this kind of covers the whole rest of retail. Not much has changed on the social settings, and not much has changed on the school distance learning setting slider here. So I mentioned new guidance for you that National Association of Realtors has a brand new PDF, and it's a customizable brochure. If you use this link, it'll take you right to this page. There are some, 8 simple rules how to open the file, and then how to add images and customize it for yourself. But this is a guide for you to use with all your consumers that might need some advice on dealing with their bank, talking about forbearance and other options right now. I'm just gonna go and share with you what that guide looks like in real time here, since we can. So it looks like this 4-page PDF, Protect Your Investment, a guide for at-risk homeowners. This is an opportunity. Put these guides in your hands, put these in your toolbox, and touch base with your consumer base, and check in on people, see how they're doing, and offer them some assistance on how they can protect their investment, how they can seek a repayment plan or a loan modification, how to approach talking to your lender, how to request a forbearance, reinstatement, lots of terms, how to avoid negative terms. Yep, right here, what to watch out for, scams and unfavorable terms. So this is as a guide for all of you to use with consumers and reach out. And what NAR did here was leave blank space for you to add your picture, your contact information, and to make you the expert with your consumers. So this is a great guide. I would put this in your toolkit immediately, and maybe put a plan together to reach out to people that aren't currently in your pipeline, and check in with people, see how they're doing, see if they could use some assistance, and then just kind of use this sheet to uniformly approach people and help them with some of the ideas around forbearance and other resources that might be available to them. I have to say that going back to 2008 and going back to the crisis, from that time, it took government 2-3 years before they first came up with the idea of loan modifications. We didn't hear, the crisis started in 2008. We didn't hear about loan modifications, until late 2010, early 2011, and they were just starting to happen in earnest then. So it took 2 to 3 years for the first intervention to come forward during that last crisis. The one benefit of this crisis is interventions have been early and often. I think that's a minimum amount of solace for us all in these times. Unemployment. I did want to say, I'll jump to it on the next screen. Unemployment has been extended for additional 13 weeks. Minnesota has 26 weeks of unemployment during regular times. The federal government and the CARES Act added 13 weeks. So that takes folks up to 39 weeks of unemployment with a $600 federal boost. Minnesota's max was $640. Minnesota increased its max to $740 during the pandemic, plus the $600 for the federal boost. So the max, based on someone's actual earnings, the max earner who's unemployed or furloughed at this time could be receiving $1,340 in Minnesota. That number varies across the country, state by state, based on the state's total. By contrast, Minnesota's having been $640 as a max in the past. Arizona is only $240. So it just kind of gives you a sense how widely it can range. But then, of course, even with the $240 in Arizona, you add the federal boost of $600 and you're at $840. For the first time ever, unemployment does apply to 1099 workers. The term for that is Pandemic Unemployment Assistance, or PUA. This is unemployment assistance for 1099 workers. There's information on the DEED website or a direct link to a step-by-step guide on how to apply for that unemployment here. And then I have some new information. Stimulus checks, $1,200, $2,400 per couple. Income caps phase out. There's an app where you can check where's the status of your refund. It is an advanced rebate on your 2020 taxes, and in most scenarios will not ever reduce your tax potential refund for 2020 as you're doing your taxes in 2021. I'll jump to the next page. There is a deadline this week, Wednesday, May 13th. If you have not received a check yet and you have reason to believe that the IRS, based on how you file, if you have reason to believe that the IRS does not have your bank routing information, you have till Wednesday, May 13th at 12 noon CDT, Central Daylight Time, to receive, to go on the website and input your bank routing information. If you do not do so by this deadline, you will not receive an electronic check for your stimulus. You'll have to rely on receiving the paper check. Paper checks will begin on late May or early June and continue on. To this point, $200 billion in stimulus checks have been distributed. You may have seen, of the $349 billion that was authorized in the $2.2 trillion bill. So that was the price tag of paying everybody the first time was $349 billion, and $200 billion has been dispersed. Some deceased persons have been receiving payments. The IRS's advice is, if a deceased person has received payment, they should return the payment. And here are some of those instructions on how to do so. There's also an exception if the payment was received and one spouse had not died before the receipt of the payment. So, but if the person was deceased and they received a payment, the IRS has instructions on their website. You can click through these instructions, and that payment should be remitted back to IRS. It's kind of a weird loophole here. I will talk about a little bit about unemployment. There wasn't a great place in the presentation necessarily to talk about it, but through April. April was a devastatingly high number of unemployment from across the country, and you can now see that the Great Depression in August of 1932 was a 25.5% unemployment rate, and we are now sitting at 14.7. This is Department of Labor statistics, and if David was online, he would walk you through these numbers in a lot more detail. But you can just see that comparison where we are through April, and then as compared to the Great Depression and other times in history. Unemployment by race, it's no surprise that things are uneven and unfair in the United States, and those numbers are being tracked here, and you can see the unemployment rate for Hispanics is 18.9%. So anyways, someone has to go to full screen. Okay. Yes. So Black unemployment 16.7%, and Asian unemployment 14.5%, while white unemployment is 14.2%. I will say that these are numbers, obviously comparison over time, but we had reached numbers where all of these numbers were kind of at 50-year historic lows prior to the crisis. So we do have to keep it in perspective, but we also have to understand that it's not just statistics; those are real people and real situations. There's some unemployment information by education level, and you can see that here. And then you can ask yourself sector by sector who's been impacted the most. And I think we all know right away who's been impacted the most. We have a good sense that it's leisure and hospitality. We know that people aren't traveling. We know people are not using hotel rooms and going out to restaurants. And you can see that they've had the biggest impact. Then the next ones are those non-critical sectors that were closed and weren't able to offer their services because their doors were shuttered for them. And then you can see the impact all the way down. So kind of an interesting chart to keep track of which sectors are being impacted most. We talked about the pandemic unemployment assistance. This is a couple slides I'm going to skip over this week. They've been covered extensively in weeks past. If you have questions about your own unemployment situation, 1099, that haven't been answered yet, please feel free to reach out to me or link through some of these slides. Let's see. I will say that we did get new guidance from the state of Minnesota. Pandemic unemployment assistance, there were some questions. What if I get paid in any given week thereafter? And there is guidance now on that. So if you click through this link, you'll see self-employment eligibility for unemployment benefits while working in self-employment. And if you walk through this, as you know, with unemployment benefits, week by week, you have to go back in and answer questions. And I'm going to tell everyone on this call to be as honest as possible when answering those questions week after week. If one week you go in and you apply and you don't have any income this week, but next week you'd had a closing, and the week after you're going in and you're answering questions on the Deed website about how much you made last week, please understand that you're required to tell the truth, report that income, and understand that that income being reported for that week may disqualify you for that week or some number of weeks thereafter. And it's all going to be case by case, but it all works through the application system. And then more answers on that at this website. And if you click here, it'll take you directly to it. There's a one-pager with very clear rules on this subject, which is great because for a couple weeks now we've been wondering how this might work. But just understand, if you've been getting unemployment assistance under PUA, that means you're a 1099 worker, that you will have to report any income and any change of your employment status as you go forward, and it may have impacts on you. Congress did vote to refill PPP. Those loans are still going out, and I hadn't looked over the weekend yet, but as of Friday, they weren't fully expended yet. So that was another 484 billion, 310 billion for the PPP program, 600 billion through the community banks. Walk through some of the SBA programs: PPP, small businesses; EIDL, small businesses, sole proprietors, independent contractors and self-employed, all with 500 employees or less for both sides. That has PPP and EIDL have very specific uses and requirements for the use of those approved loan funds. Any funds expended for categories outside of these actual very specific categories may not be eligible for forgiveness, meaning the loan would be affirmed for some up to the full amount or for some portion thereof. Let's see here.
Hey, Eric.
Yeah.
It looks like Carson Brooks might have a question.
Sure, go ahead.
Carson, you want to go ahead and talk?
I had to unmute myself.
Yeah.
No, he's already kind of covered. He was showing that brochure. That's really a good tool for homeowners. And I thought he had opened it up on the screen, but he was still staying on his slide. So that it was back in that point. So
Gotcha. Sorry about that.
It was on my slide. There is a link to it. And honestly, if you just, now that you know that exists, Carson, if you just said NAR forbearance, it'll come up.
Okay.
If you ended up at the NAR site and you just Googled it at the search,
Okay.
it'll come up. It's a really nice piece. I think what I like about it, Carson, is obviously you guys will be doing this kind of counseling, and now you're all singing from the same song sheet, and you don't have to worry that the advice a consumer gets from Carson is different than the advice that the next realtor provides the next consumer, and on and on and on, times 1.3 million members.
As a long-time broker, I like it to be accurate, so this is great.
Right, yeah, and
you'd
hate to have to put yours together and then put your own together and then keep it up and worry about changes and on and on. So
yes, yeah, good to point out. Thank you.
Yeah, thanks. So PPP here as well, 6-month repayment, 12-month for EIDL. PPP requires that you keep people employed to certain. If you want to get the loan fully forgiven, you would need 75% of the loan towards payroll costs, and other SBA criteria must be met. And that means you can't reduce full-time eligible workers' salaries or their time on the job for the better part of 8 weeks. The whole point of PPP was to keep people employed and keep people off unemployment insurance. So, and the same is certainly true of the EIDL. The difference between EIDL, go back. The main difference between these two is that, besides some of the other components, is that PPP you apply directly through your local bank or credit union, and EIDL you apply directly through the SBA. So there's some guidance here based on timing from the refill. I'll leave that to you guys to check it yourselves. The first round of those of PPP, 33,819 emergency loans were approved, and we hope to get updated numbers on the second round very soon. I will point out that here's a story from the National Law Review, and there's a link to the article here. And then inside this story, you can link back to Secretary Mnuchin's guidance on this. But you guys may have seen some headlines where some large-scale businesses with more than 500 employees or with a larger capitalization, or companies that were clearly not eligible to receive PPP did receive PPP. The Treasury Department has issued guidance, and it has created what they call a safe harbor, and they have until May 14th, again, another deadline for this week. They have until May 14th to return those funds, and there will be no questions asked. And it would be, if they return, if it was a company that received PPP funds that shouldn't have, they can return the funds by this deadline, and there's instructions on how to do that. And it will be treated as if they met every single piece of the criteria and that they didn't do so willfully or wrongfully. After this date, I think you're going to start to see the SBA and Treasury may end up fining people or might end up taking actions against some companies that wrongfully held themselves out as being eligible for PPP. There was a story at one point that the LA Lakers had received PPP. Quite frankly, the LA Lakers probably don't qualify as a small business. So if I were them or a similarly situated company, I would be attempting to return PPP funds before the safe harbor deadline comes and then is expired. So there's guidance in here about how to do so and when to do so. The reality of this is people were applying for loans and some of the thought process behind it is people were applying for loans, and the earth and the ground and the business environment, the economy was shifting out underneath everyone as they apply. So should someone have criminal liability for seeking a PPP loan early on in the process when the rules were changing, eligibility was changing, information about it was changing every other day. And so the idea here is, hey, we understand that this was a very uncertain time, and based on the knowledge you had at the time you applied. But after the fact now and after review, it looks like you're now eligible. So they're extending this safe harbor. So it's interesting kind of a wrinkle in the whole thing. And maybe just with that, are there any other questions?
Eric, it doesn't look like it, but
Okay.
I'll let you know if I see any come through.
So as we go through this and other weeks going out, as I update this presentation, I'm going to keep track of these kinds of items for you. Okay, here was a government program. The program came out. This is how you could apply. A good number of our members have. But now here's some of the backside regulation. Here's some of the other items. You know, in this case, it's safe harbor, and upcoming there'll be some other items as well that are kind of it's kind of regulations on the government response, maybe kind of after the fact. I think you're going to see some of that for some time, after the fact regulations on things that have already been rolled out. Other CARES Act provisions, I've covered these in the past couple of weeks. Federally backed student loans, no payments for 6 months, no interest, no penalties. There are new special rules in the CARES Act that allow for accessing of retirement funds. Check with your tax advisor and check with your plan administrator, but you may be able to access some of your retirement funds to create a temporary budget for yourself. The 2017 Tax Cut and Jobs Act had gotten rid of the charitable deduction for people that do not itemize. The CARES Act has reinstated $300 charitable deduction for 2020, and you need not itemize. So if you itemize or not, you can qualify for 2020 of a $300 charitable deduction. This is meant to encourage folks that are still financially solvent and have the wherewithal to do so to freely contribute to charities in 2020 and give a little bit of credit there. There's been, for payroll companies, there's a delay of employee payroll taxes. There's an employee retention credit. That doesn't apply to a wide section of this audience, but it does bear mentioning. All the tax deadlines have been extended. 1031 exchanges deadlines have been extended. Tax opportunity zones all have been extended. And in a rare federal government approach, they extended it all to the same day, July 15th. So that was kind of interesting and helpful. Let's see here. The Minnesota Legislature, we learned last week, prior to the pandemic, had a projected budget surplus of $1.5 billion. That, based on an economic update, not a new forecast, just an update. It's important to be clear about the difference. A full forecast would have all the details. An update just has some of the raw numbers and the top line numbers. The surplus has changed from a $1.5 billion surplus to a $2.426 billion deficit. This has some impacts on the legislature. The bonding bill was previously going to be over $1 billion with great rates and a good time to refinance, or a good time to finance government debt. It'll probably likely be less than $1 billion now. And in that bonding request was a bill for some housing dollars, $100 million for people at the lowest, to receive direct cash assistance at the lowest incomes in Minnesota, up to 300% of the federal poverty guidelines. And that bill has not been acted on yet. In the House, it's a $100 million bill. In the Senate, it's a $30 million bill. And you can bet the state's changing finances will have an impact on that. I mention it here. It's not a huge part of your day-to-day as a realtor, because you're selling mostly for sale housing on the first-time home buyer price. It's the first one or two price points are the starting, and then all the way up. But I mentioned this in terms of this impacting the entirety of the housing continuum in Minnesota, and these dollars do help. And someone that gets help today, who makes it through the crisis, and a year from now, 2 years from now, 3 years from now, 5 years from now, these are your future clients. So I mention it here for that purpose. Minnesota House Republicans are requesting that the peacetime emergency be lifted, and they're kind of holding the bonding bill hostage. The way that works is the bonding bill requires a supermajority, and Democrats in the Minnesota House do not have a supermajority in terms of the number of members they have in place right now. So Democrats in the Minnesota House, to pass a bonding bill, need Republican help, and Republicans are asking for the governor to lift the peacetime emergency. To be fair with you, just based on my experience, I don't think that's likely to happen. The peacetime emergency mentioned earlier was first declared on March 13th. It was renewed on the April 13th, and most of us expect that it be renewed again on May 13th. The Minnesota legislature is set to adjourn on May 18th, and it's late. It raises a lot of questions about whether there would potentially be a special session. I think, again, I will see if there's any questions. Just looking at the time.
I don't think I see any, but attendees, please be sure to send us some questions to the Q&A or raise your hand if you might have a question for Eric.
Sure.
Thanks.
And again, I know, I put this together with the idea that you're taking it back to your offices and sharing it widely with people in your office and colleagues and other folks too. So I know we're getting the word out here. So here are those projected revenue changes. You can see the previous projections, or you can see the projections, and then you can see the change. And obviously, any of these parenthesis categories are negative dollars. So they're predicting 1.6 billion less in individual income tax remitted, 1.3 billion less of general sales tax remitted, 405 on the corporate franchise tax, and just under 200 million on all other revenues, for a massive impact of $3.6 billion swing. So this is the math. This is the surplus. Here was the original projected revenue. Here was an uptick in estimated spending, mostly based on the virus itself and some of the steps the legislature's already taken. And then this reserve item is $63 million from the stadium reserve. It's downwards because it was previously higher, but you add this up and you get to the $2.426 billion deficit. And you see here changes to the stadium reserve, and that's the point here. This, when it says projected reserve and it's calling it the stadium reserve, do not confuse this reserve and the stadium reserve. This reserve here and the stadium reserve are one and the same, but that is not the Minnesota Rainy Day Fund. The Minnesota Rainy Day Fund has $2.35 billion in it. That was enacted during the Dayton administration. It was a change to the way Minnesota does budgeting. The Minnesota State Constitution requires a balanced budget, and during the Dayton administration, they started to erect a rainy day fund. So if you go back, technically, you're looking at a budgetary deficit of 2.4 billion, but a rainy day fund of just about that much. So I can say though that these dollars in this fund cannot be expended without appropriation, without legislation. So legislation to appropriate these dollars must be enacted if they're to be utilized at all. And so with that, you have the Minneapolis City Council. They are operating with a smaller committee structure. They've enacted a hiring freeze. They've enacted a wage freeze for union and non-union represented employees, and that wage freeze will save the city $6 million, and they are delaying other large purchases. There was, a week ago, there was a call for, and there continues to be kind of a rallying cry for both here and across the country for forgiving rent and mortgage payments and just kind of canceling mortgages and canceling rent. Those policies aren't getting, the policies themselves lack in specific detail, lack in kind of workable policy solutions, but they remain a great optic for people, you know, for politicians that want to tell constituents they're on their side. So it is, I mean, there is a movement here. We should understand it and respect it and be aware of it. You know, I'm not going to jump on Facebook and start taking sides and arguing with people about whether we should cancel rent or mortgages. I'm looking for actual workable policy solutions that could potentially help. But being aware that this messaging is out there is probably important. So some of the emerging issues, there's been some discussion, go back. There's been some discussions about a second round of stimulus. There's been no movement on that just yet. We are looking for more federal guidance on foreclosures and evictions. NAR is starting to amass some of that information, but a lot of it comes down to most mortgages are held with federally chartered banks. A lot of mortgages are backed by the secondary mortgage market, so those are already under current federal orders in terms of how foreclosures and evictions work. But then beyond that, on the conventional loan side, there's still the private contracts part. Again, the private contracts connected with federally chartered banks. So, you know, local advocates could ask the governor to make a change here in state, but if your loan is held with a federally chartered bank, there's only so much and so far that even those actions could go on their own. And then more state guidance on foreclosures and evictions, and just kind of being aware of this pressure to act. I said earlier, I do anticipate a continued this question about the intersection of policy programs, PPP, EIDL, PUA, and repayment. And this to me is, these programs got rolled out so quickly. What are the backside regulations going to look like? What does it look like if someone received PPP, but then a week later they also qualified for unemployment based on a previous filing? How do these things work together? And so those are a lot of the questions that we're still looking for clarification on. I do think with the PUA and the fact that week to week you have to go back in and recertify, there were some questions on that one, and we're starting to get those answers. So I will incorporate those answers as we move forward with this presentation and other ways to get it out to our members as well. So and then the same thing with PPP and Safe Harbor. We talked about Safe Harbor. And, you know, a week ago, you know, a couple weeks ago, there was not a lot of information and there wasn't a deadline on Safe Harbor. So, and now there kind of is. That's kind of been brought to the forefront. So as these programs evolve and things change, we'll bring you those updates as well. And I think you're going to see Congress wanting to, there might be continued pressure to increase the pay of frontline workers. And then secondarily, I think it's not on here, but I would expect more talk at the congressional level and maybe some action at some point at the congressional level on how to fund state and local governments and these deficits they might be facing. But with that, I also think Congress is starting to understand and realize just how costly some of these interventions have been already. The $2.2 trillion in new spending under the CARES Act, plus the 484 for the refill of PPP brings you to $2.684 trillion. And that money had to be bonded, it had to be, debt obligations had to be created and sold off, and people had to purchase them, and that's where that money came from. And that money is going to have to be repaid over the long haul, and is being added to the country's debt, which is now well over $20 trillion. So I think there's some incentive to try to do some of these things, but I also think members of Congress are going to be very conscious of how much every intervention from here forward costs. So with that, that's my presentation today. That was relatively quick. We did kind of gloss over some areas that we had further gone deeper into. I think that's just kind of based on where we've evolved on this. I would like to thank everyone that's joined us today, and anyone that accesses this recording later. Thank you for taking the time to look through this information and incorporating it into your business, and having it be a potential resource for you all. I'd like to thank each of our sponsors: Bell Bank and Mortgage, North Star MLS, Royal Credit Union, and Supra. And with that, I would, here's my contact information. If you ever have questions about federal, state, or local policies and how they may impact your business, I'm always available for you. I try to return member calls within a 24-hour time frame, sometimes much sooner than that, hopefully within the same business day. Volumes can get high at some point, but that's my commitment to you. If I don't have the answer on a federal policy that impacts your business, or if I don't have the impact on a state policy that impacts your business, I'm going to either go get that answer for you or put you in direct contact with the person at NAR or the Minnesota Association of Realtors that can provide you that answer. So at the State Association of Realtors, that could be Chris Galler, your CEO, or it could be Paul Egger, your chief lobbyist. It could be your second in command lobbyist, Matthew Spellman. At the National Association of Realtors, it could be any number of our lobbyists from either side of the aisle, either body, and then a vast network of issue-based kind of SMEs, people that have deep knowledge in specific areas. I will mention that NAR's meetings have all gone virtual this year for the mid-year. We would have been doing that here in this month and this week. And I think many of our members that have been involved at the National Association of Realtors have already accessed some of those meetings. I've been attending. I'm on a committee. I'm on a broker engagement committee, and I've attended that meeting. I've attended some of the GAD meetings that would normally be held in Washington, D.C. I've been on calls with a lot of our members, connecting with members of Congress and doing Zoom calls and video calls, and still bringing our issues to bear. So it's not like because we can't meet in person, no meeting is occurring with elected officials. It really truly is. And then at the local level, I've been in contact with Mayor Fryer's office on a number of local issues, and a number of city council members in Minneapolis on a number of local issues that we're working on there as well. So everything continues on, and it's just been a little bit of an adjustment, as I'm sure it has been for all of you, on adjusting to the technology and connecting in new and different ways. So with that, I would turn it back to our host, Amy, and see if there's any further questions.
Thanks all for attending. Eric, excellent information. From your gut, I don't want to put you on the spot, from your gut feel, what do you think Walz is going to say about the stay-at-home order?
I think I mentioned it earlier. I think you're going to you see the dials and the adjustment and the slow movement. I think you're going to start to see, it's just this kind of slow drip style campaign where certain things get turned back on slowly over time. I think one of them that's already been talked about and we'll hear more about was elective surgeries are elective procedures at hospitals are starting to come back online this week and next. So I think that's kind of like a next iteration, which is helpful too, because I think a lot of those, and I think it's concerning for all of us when we see doctors and nurses being laid off, but it's because they weren't from those critical sectors or those portions of the hospital that were absolutely critical. And now you see that elective stuff coming back online. And not every elective is this, oh yeah, I want to do this. Some elective stuff is just, it's procedural, it's just not emergency based. So it's nice to see those come back online and see some of those come back to normal. And I think you're just going to continue to see this kind of slow drip and return to normal over time. I think there's cautious optimism. I'm definitely feeling that. And I think there's still a little bit of concern and trepidation as well. So there's kind of that balance.
Well, thank you, Eric. MAR is lucky to have you at the forefront of all this. So thanks for your time and energy. Again, attendees, thank you so much for joining us today. If you do have any questions, feel free to reach out to Eric or anyone on staff at MAR. We're here to serve you guys as our members. We are thankful that you are with us and staying busy, and we hope to see you at the next webinar. If not, plan to join us for David's on Thursday. So thanks again, everybody. Have a great Monday. Hope you can enjoy today's sunshine and have a good day.
Thank you so much. Appreciate it, everyone.